Hey, what's up, guys? My name is Frank Malarsik. Hope you all are having a great day today. This is episode 2 of my monthly portfolio update series. And going forward, I am going to be making some changes to this series. And the main reason for that is because, yes, I am leaving Robinhood. So if you do want to hear what brokerage I'm moving to and how this series is going to be changing in the future, make sure to stick around to the end of the video to hear the full scoop. And as always, make sure to like the video. And if you aren't already subscribed, first, just ask yourself, why you wouldn't subscribe, and then even if you have a good answer to that, just subscribe anyway. It would really help me out. Thanks. So before we get into the portfolio update, let's talk a little bit about why I'm leaving Robinhood. So if you guys don't know, I opened my Robinhood account in December of 2019 last year, so getting close to a year ago. And even after a few months, I realized that it was a good brokerage for me to learn about investing on, but it really wasn't a platform that I wanted to be on in the long term. And then in March, they had some problems with their app being down, and then they've had additional problems with similar instances in the recent months. And recently, there's also been some people's accounts that have been hacked and stuff like that. And for those hacking stuff, I don't think that's Robinhood's fault as far as I'm concerned, but it's certainly their fault that they have crappy customer service and the customers who were having problems couldn't reach out and contact them when they were having those problems. So that's the real problem, in my opinion, is just the lack of customer support. I mean, there's really no phone number you can call. Apparently they used to have one, but they discontinued it, and don't know why they did that, but that's what they did. So when I was setting up my new account with my new brokerage, I had a little problem, and I called the brokerage up, and within 5, maybe 10 minutes, I was talking to a live employee, and they were able to help me fix my issue super quickly, and they were really helpful. So that's the kind of customer service that Robinhood needs to get. And so that's kind of why I moved as well. I know you guys didn't click on the video to hear about Robinhood, so I'm just going to jump into the portfolio update now. So as you can see here, my Robinhood account is just sitting at around $872, and it's pretty flat. Basically, ever since the 19th of October, which was Monday, I believe, it's been flat there. So that's when I basically sold everything because I didn't want to pay the $75 transfer fee, and I did have a lot of fractional shares as well, which those don't transfer. So basically, I just sold everything, and then I bought everything back in my new brokerage. But I've kept the cash balance in here because I still have some pending dividends. So once I receive all those, I will basically just transfer this back to my bank account. So that's what this little blip was here, was a dividend I received, I think, from Cisco. So I'm sure you guys will hear about that in the dividend update. But that's my Robinhood account. It's pretty boring right now. So basically, the spreadsheet on the right here is just a copy of my portfolio at the time of recording the last portfolio update. So basically, on the left here is my current portfolio spreadsheet, and I just highlighted in green the share count of the companies that I added to. So as you can see, I added some to Apple, I added some to APD, I added some to J&J, JP Morgan, Microsoft, Procter & Gamble, and Travelers. So those are the ones I added to here. I added a little column for cash just to track that as well. So I'll sort of be explaining what I'm doing with that in the future, but that's just another way we can look at it. And you can see here my cash. You can see now my cash position is only about 2.5%, but I don't know. I just kind of deposit a little bit at a time and usually buy as I go. So I really don't keep much cash in my actual brokerage account. So this is a performance tab of my spreadsheet, and I haven't really talked about this much, but basically just trying to track my returns. So basically I just keep track of the average cost of all my positions over in this column, and then the total return based on the current value and that average cost, and then kind of a overall return for my whole portfolio here. And so this total invested right here is a little bit complicated, but I'm going to try to explain it as best I can without sitting down and doing all the math for you guys. But basically in my Robinhood account, I've deposited $850. So the reason this is a little lower is basically when I decided to switch to another brokerage, I had about $871 and some change in my Robinhood account. That was the value at that time. So I just deposited $870 into my brokerage, my new brokerage, and then I invested all that. So basically, this total amount invested is the sum of my current equity minus the dividend payments, because I'm reinvesting those back into my cash position and then buying more stock in whatever company with those. And then I'm also subtracting any profits I took, which I have in my transactions tab. And then this 7.77, that's basically the capital gains that I calculated that I received from my Robinhood account. So that's just to kind of keep track of my returns since I started this portfolio back in December. So as you can see, my calculated return is around 2.86%, which is not that great compared to the S&P 500, which is around 5.5% on the year. And I'm just comparing year to date because I started my portfolio right around the end of December, which is pretty much the same time frame as January. So year to date, the S&P is up about 5.5%. So I'm really only about half the performance of that, but mostly I attribute that to the first 6 months of me investing. Really, I did not own a lot of high quality stocks. A lot of them were pretty low quality in the beginning. They were low quality stocks that didn't even pay dividends. And then after that, I started buying stocks that paid dividends, and most of those were still low quality, even though they paid a dividend. And then eventually I found some stocks that were high quality and paid dividends. And I've sort of been working to get rid of those lower quality stocks ever since. So those are kind of still haunting me a little bit. So I'm doing the best I can, I think, and I think I've improved a lot, which is what I really care about. So I'm really looking forward to 2021 because I feel like that will be a true test of like how good my portfolio is compared to the general market. Because in that year, I'll basically have, by then, I think I'll have a good portfolio that I am proud of. So I want to go over this changes over time tab as well, because we got some more data in here. It's been over a month since I first started this, so we have another basically data point. So as you can see, my dividends went up by over $2, which I think is really good on a percent basis. Maybe I should include like graphs or charts of the percent that it went up every month. That would be interesting to see, I think. But I think that's a pretty good increase, and the average CAGR went up by about 0.5%, which I think is pretty good for only a month's time. And basically, I didn't have any dividend increases, but I think it was just because I bought companies mostly like Microsoft and Apple that have high dividend CAGRs, so that raised my average dividend CAGR. So now is the moment we've all been waiting for. The brokerage that I officially switched to is Fidelity. And I really like Fidelity. I currently have a Roth IRA with Fidelity, and I have a credit card through them. So I like their platform, and they have good customer service. As I said in the beginning, I had a slight problem. I couldn't link my bank account, and so I called them up, and they helped me out, and they were really helpful. So I like the customer service, definitely a lot better than Robinhood already. Their user interface definitely isn't as nice and streamlined as Robinhood's, but I mean, it's still pretty good. It's still a lot better than Vanguard. I use them as well, and it's definitely better than Vanguard, so I like that. And they have fractional shares of stocks, which I don't think Vanguard has, so that's why I went with Fidelity. So another thing I like about Fidelity is that they offer downloadable CSV files with your account statements and transaction history and stuff like that. So a CSV file, if you don't know, it stands for comma separated value. And so they're basically just files that contain a bunch of data, and all that data, each data point is separated by a comma. Who would have known? But basically what you can do is put that into an Excel spreadsheet, or what I'm going to be doing is creating a Python script to parse through that data and gather certain pieces of that data that I want to basically automate my spreadsheet sum. So that's why I'm going to be changing my monthly update series. I'm basically going to be combining the portfolio updates and the dividend updates into one video. And I'm going to be doing those like right at the beginning of every month, talking about the last month. And that's another thing with Fidelity is that they basically give you their dividends right on time, where sometimes Robinhood's dividends are a day or two late. So I'll be able to do those updates right at the end of every month or the beginning of the next month. So just to recap what you guys will be expecting, I'll be doing a dividend income update for October, sometime around the beginning of November, within the first week or two. And then I won't be doing a portfolio update in the middle of November. I'll just wait until December, and then I'll do my dividend and portfolio updates right at the beginning of December. So in the spirit of Fidelity, the quote today is by Peter Lynch. And he said, "The trick is not to learn to trust your gut feelings, but rather to discipline yourself to ignore them. Stand by your stocks as long as the fundamental story of the company hasn't changed." So I think this is 100% accurate. One of the biggest mistakes I think people make in investing is just listening to their emotions too much. When their stocks go down, they just get scared and sell, or when the market's going up, they get excited and start buying in a ton, and then when it goes down, they weren't really prepared for that, and then they sell. So it's just kind of a loop there. Thanks for sticking with me to the end here. I'm really excited to see where my portfolio is going to be able to go over the next year with Fidelity. I feel like I'm at a point now where my portfolio is kind of generally where I want it. So I think it's really going to start performing well now for me. So I'm excited to share this journey with you guys and share some of the automation that I've been working on a little bit that I talked about. So hopefully you'll get to see that in the next portfolio update at the beginning of December. So thanks again for watching, guys, and I'll see you in the next one.